What are some things to look for when considering investing in a stock? How can investors judge a stock's potential growth? All right, let's dive into the financial deep end here. First things first, when you're thinking about investing in a stock, think of it as becoming part owner of that company. So the question you should ask yourself is, would I want to own this business? Company fundamentals. Now, I'm not wearing a tailored suit or ringing any opening bells, but here's what I've learned from my time in Portland, where coffee shops double as trading floors. Look at the company's fundamentals: earnings, revenue growth, profit margins, return on equity, and debt levels. These are like your basic health checkup stats, but for a company. Competitive advantage. Does the company have a moat? Not the medieval kind, but an economic moat that protects it from competitors. This could be a strong brand, patents, market dominance, or anything that gives the company a leg up. These moats make it hard for competitors to just waltz in and take market share. Management investing in a company means trusting its management to not run it into the ground. Look at their track record. Do they treat shareholders like business partners, or are they just on a corporate ego trip? Industry outlook. What's the future look like for the industry? If you're betting on typewriters in an iPad world, you might want to rethink. Understand the trends. Are they facing headwinds stronger than what we get walking down the streets of Portland in winter? Valuation. This is where things get a little less black and white. You'll want to look at different metrics to figure out if the stock is a good deal. Price to earnings, PE, price to sales, PS, and price to free cash flow ratios are a few you might want to cozy up with. Growth potential. When judging growth, think about the potential for expansion. Is the market they're in growing? Can they increase prices without causing a customer exodus? Look for opportunities ahead, new products, markets, or innovations. Dividends. If a company's paying dividends, it's like they're paying you rent for your investment. It's a sign of stability and confidence in future cash flows. It's not a deal breaker if a company doesn't pay dividends, especially if they're reinvesting that money to grow, but it's a factor to consider. Risk. Remember, with higher potential returns comes higher risk. Are you able to sleep peacefully at night holding this stock? If an investment's keeping you up longer than the Portland nightlife, it might be too risky for you. Look, there's a sea of information out there. The above are just some navigational tools to help you plot a course. But remember, investing's like the weather here in the Pacific Northwest. Unpredictable. Do your homework, diversify your portfolio, and never invest more than you can afford to lose. And hey, if you're still unsure, it might be worth chatting with a financial advisor. They're like raincoats in financial storms, not always needed but invaluable when things get dicey. Happy investing!